Hi, it's Frank CappThesis. Today I'll be looking at the significance of the two straight 1% declines that the S&P 500 just endured. We're also going to look at the magnitude of the pullback that the index can withstand right now to keep that 6,100 target still intact. So let's first start by talking about what has happened after 1% declines so far since the October lows. And we talked about this table before, and the first 1% decline actually happened in December. And each one of them, up until what happened in March, had an immediate 1% gain the very next day. The only time that did not happen was actually in that March 5th and March 6th. We had a 0.5% move, still on good volume, but the very next day, another 1% gain occurred. Same thing happened at the beginning of April, which brings us to what just occurred over the last few days. A very big down move on Friday, April 12th, followed by another 1% decline this past Monday on the 15th. And so terrible breath on Friday, very bad breath on Monday. So if nothing else, it tells us that things have changed. And we've heard the term character change before from us, and that's what we always continue to look for, even though week after week, looking at all of the data that showed that the bid was still intact and investors still cared about buying the dip and that things were really tranquil on the way up. And now things have changed. Could things return to what we just had at any time? Yes, but we know how these goes. After 5 months of moving basically straight up, and the pendulum has swung all the way to the other side, below the uptrend line, which we talked about before. Now we're entering a different phase of this market, if nothing else. And so here are all of these 1% moves on the same chart. Again, going back to the very start of when things changed back in late October of last year. And as we can see, just over the last number of weeks, 3 1% declines, 1% gain. So again, things could be shifting in that matter. And we also see this on the table that we update all the time as well, where again, 1% losses in the first half of April shows us that it's the first time we've had more than 2 going back to October of last year. And in reality, again, two-way volatility is something we pay very close attention to, because from our perspective, things really changed in 2023 as the first quarter began here in April. And again, two-way volatility in the form of 1% moves both up and down fell off a cliff back then, and we didn't have more than 5 in 1 month in any time other than what happened in October. And because of October reversed so strongly, it almost looks like an outlier right now. And so the question is, how much worse will this get in April? And will April also be an outlier? Or after 12 months really of strong action in the form of low volatility, uptrends working, bullish patterns working, are we now entering a different phase? And this is, again, one of the main things we'll be paying attention to lead us in that direction or not. So in terms of drawdowns, as we know, the biggest one so far, a little over 4%, looking at intraday moves. So from the peak to the trough so far, which is basically more than double of anything we've seen before. Again, 4% is not going to change matters in that sense, but it could start the process, as this process was started over here. And one of the things we talked about in CappThesis over the last few days was the last 2 weeks were down 2.5%, which was one of the biggest 2-week down moves we've seen in a while. What also was interesting is that the 2-week move after the July high here was also about 2.5%. which of course got things started on the other side, and much more corrective activity followed after that. So updating what it looks like versus the uptrend line now, down about 3 to 3.5% from that point. Again, it lines up to what's happened here. We still really haven't seen a bouncing attempt from it, which would not be surprised to see at all right now. It's a matter of what that bounce, how that bounce is dealt with. A lower high from this point, again, can turn what we've just had into a much bigger topping formation. So which we'll see, but that's what we're dealing with at the moment. And so S&P 5,000 is an interesting one, because we're now getting close to that level again now. And back in February, we wrote a whole piece dedicated to round numbers, showing that over the course of time, after hitting different 1,000 point thresholds, the S&P every time pulled back to and undercut that level before eventually getting back above it. Now, this occurred over time, and the biggest lag between first hitting an upside or hitting an important milestone and actually getting above it was back in 1998. First time S&P 500 hit 1,000, didn't get back above it for good until late 2009, 2010 over here. So we're talking about 11 years worth back and forth movement, much more than that, we know. Some very strong bear markets in there. But even every other time as well, in hitting 2,000 for the first time, in 14, actually didn't get back above until in the summer of 2016. By that time, people were tired of hearing about it, so forth and so on. The bottom line is, we talked about the notion of we could have an initial follow through 5,000 for a few months or longer, but if history serves as any guide, we know that the 5,000 will get undercut again. What it does from there, we don't know, of course. The biggest thing is, no matter what level that we're in, we get to see how the market can come back, form another bullish pattern, consolidate in a constructive manner, so forth and so on. So whether 5,000 gets undercut or not too surprising either way. So in terms of momentum, one we always talk about or have been talking about over the last year now is just that short-term RSI on the 2-hour chart. So the 14-period RSI and the 2-hour, as of this morning, had gotten very close to oversold, not quite there yet, but as close as we've gotten by far since the beginning of this rally. We just talked to what happened again back from March through late July or early August. First time it hit oversold, just tagged it there, marked a pretty good exit point. And so could this mark the same amount? Potentially. We're still, again, 4% off the high, so we're not at it. But if you look at from the first time it exited an oversold condition to the next time it got back into it, it was still captured 20% of the move. So this has been very good in capturing the trend, right? Riding the trend, really, more so where other strategies would have told us to get out, whether we're looking at a traditional overbought, oversold oscillator or something else. So this is an important one we'll continue to watch over the next few days as well. So the daily price action, just to update this, again, very instructive, just showing how things have progressed from some small movements, pretty strong breadth, and a lot more new highs to not, right? Just over the last few weeks in April, more 1% declines, more closes below the midpoint, a lot more days where we had bad breadth and that breadth getting worse on the way down. Not a lot of new highs with everything pulling back, and just more new lows. All those things together just tells us, again, character has changed right now. How severe the pullback needs to be remains to be seen, but again, we're below that uptrend line. Talked about uptrends being different uptrend lines, so the bigger uptrend remains intact, but what we had going from late October to March is in the rearview mirror at this stage. So in patterns, when will we know really that there's a momentum shift? When a bearish pattern finally has a downside target hit. And so we have one here. It's relatively small, as you would imagine, coming off of what was just recently the high. But a downside break, we have that now. And an eventual target would be about 49, 44. Not a big move, only about, say, 3% from that breakout zone or breakdown zone. But it's just something we haven't seen. We've seen some potential breakdowns before. We've seen some breakdowns that have only gotten, a minimal follow through. For this one to be different, we'd have to just to see this downside target acquired. And one of the reasons is that, again, that will tell us, that things are changing, and also it will make it more difficult for the next bounce to get that much more back to new highs, at least right away. It would cause all of this to be supply. It will cause, and a lot of people see that, a lot of traders will see that as well, and potentially be the next spot to short again. And so we talked about how bullish patterns have different steps needed to get from a bullish pattern to an uptrend. It's just the reverse on the downside, where getting a bearish pattern target hit is one of the steps. The next one would be seeing that lower high and then forming additional bearish patterns, and that played out, of course, throughout 2022. So in the meantime, the much bigger bullish formation is still in play here, right? So the 6,100 target still there. And on the way up, 6,100 gets a lot of eyes and attention and press, of course, because of how further it is and another round number, so forth and so on. That's important. What's been more important, though, is as the S&P is extended from this breakout zone, it just increased the area between that zone and where we are for the ability of the market to pull back, right? So it's a bigger cushion. Now that cushion is being utilized by the S&P, and we still have about, got up about 8% above the highs, or now 3% below that or so. So we're, still 5% above. So it still has the ability to pull back into that zone. And so one of the things we talked about today, that this is a silver lining that we can't ignore, and the fact that it is utilizing the cushion. So what could happen on the bearish side? A number of things. The bearish target could get acquired. The market could drop another 5% back down to 4,800. It could undercut 5,000 on the way down and possibly form other bearish patterns as well, and still be above the breakout zone, which would then keep 6,100 in place. That would be the perfect scenario, right? That would be something that if that happens, of course, we want to buy that dip near 4,800 and hopefully see more bullish patterns start to form. But that is the hope right now if you're on the bullish side, if you want to see this uptrend continue without being too tricky on the way down. Do we think that things play out differently? Most likely, but that's just what we're dealing with right now. See this bearish pattern number one, have its downside target acquired, and we'll take it from there. Don't forget to check out these videos and subscribe. I'll talk to you next time. Thank you.